All right, so let's begin the show. And today on board, I have with me Pankaj Matpal, MD of Optima Money Managers. Pankaj, good evening and welcome to the show. Let's begin the show. And I have first query coming up from Mr. Pramod from Kerala. He says that he's been investing 53,000 per month in mutual funds, and the funds that he has in his portfolio are Tata Digital India, 10,000 rupees going in there, Quant Infra, Quant Healthcare, both 4,000 rupees SIP, HDFC Banking Financial Services 5,000, Quant Flexi Cap, Navi US Total Stock Market 4,000, Tata Small Cap, Canara Bank Small Cap 5,000 each, Motilal Oswal Mid Cap 6,000, Parag Parekh Flexi Cap 4,000. He's having stock worth rupees 5 lakhs. He's invested in 39 stocks for that. He's also having a home loan and paying approximately 35k as monthly EMI. Liquid cash is around 6 lakhs, waiting for market correction to invest more. And at the age of 50, with the current portfolio, how much will he be able to accumulate is what is his question. Okay, so let's give him the figure first, Pankaj, and then let's dissect his portfolio and tell him that where he needs a change. So what's the figure at the age of 50 with this portfolio he'll be able to achieve?
See, because Pramod has a very aggressive portfolio, he has mostly thematic funds, small cap funds. So if he stays invested and keep switching from one theme to another theme, so I'm expecting 15% CAGR, and based on that, he can accumulate around 3.56 crores by his age of 50. It means 14 years around from now onwards.
All right, Pankaj, now let's talk about his portfolio mix. We don't have him on the phone line. Otherwise, I could have asked him the reason why making such a vast portfolio and so many elements involved in this portfolio, you know, starting from sector-specific funds. Okay, but so one more thing before I go on the fund mix question. I don't know if you'll be able to advise him on stocks, but then 39 stocks he has in his portfolio, and 5 lakh worth of rupees invested amount is over there. How would you guide him to manage a portfolio of 39 stocks?
Definitely in general, if I tell you, see, any investor, if he wants to invest directly in stocks, so idea should be that you have some selected stocks where you expect that these stocks will outperform the broader market. If you have 39 stocks in your portfolio, it means you are creating a portfolio like a mutual fund portfolio. So in that case, what I believe that a fund manager can manage the portfolio better than an individual. So ideally, if you have such large portfolio for 5 lakh rupees portfolio, you have 39 stocks, so better invest in mutual funds. And as he has been investing in different themes as well as diversified funds, so it will be a better choice, I believe. Otherwise, if you have good knowledge, you have access to research, and you can have some 5-6 good stocks where you expect that portfolio of those selected stocks will outperform the broader market, then only one should consider investing in stocks directly. So that is my advice in general. Now coming to mutual fund portfolio, see, funds are good. He has a good mix of diversified funds and thematic funds. But as he has themes like healthcare, infrastructure, as at this moment, I expect good performance from these themes. But you'll agree with me that these themes or sectors keep rotating. So he has to monitor this. And whenever he feels that the theme has played out, he has to switch from one theme to another theme. That is very, very important, because sometimes what happens, if you do not exit at the right time, then there are higher chances of losing money.
All right, so the kind of changes that you've recommended, he needs to really implement. But then looking at the amount of SIP, 53,000, talking about his fund now, we don't have him on the phone line, so I really don't know what is the kind of risk appetite he is aiming for. And looking at the aggressive portfolio, the kind of changes you've expected or you've recommended, in future, if he wants to increase his SIP amount and also the kind of lump sum he wants to put, he's waiting for the right time for that. I mean, you will advise him on the market timing to invest the lump sum amount. Should he be doing that in this particular fund that you've recommended, the changes that you've recommended? And also in future, if he wants to increase his SIP amount, do he also need to have new funds added to his portfolio? What do you recommend?
Kavita, if he wants to add funds, then I'll advise that he should also reduce from the existing portfolios, because he has digital means technology fund, he has infra fund, healthcare, banking. So many themes are there in the portfolio. So if he wants to add diversified funds, in that case, he should definitely means reduce some funds from his portfolio. Now, right now, he has Motilal Oswal Mid Cap Fund, which is diversified mid cap fund. He has Parag Parikh Flexi Cap Fund. He has Tata Small Cap Fund. So, my suggestion, if he wants to increase the amount, or like he said that 6 lakh rupees what he has, and he is waiting for the opportunity. So, in diversified funds, he should top up. That will be better. But if he really has a very good knowledge about themes, in that case, he can even add to Quant Healthcare Fund, or like he has this infra fund, Quant Infra Fund. So right now these themes are looking good, but otherwise Quant Flexi Cap Fund also he has. He can top up that fund as well. So, but he has to decide whether he wants the diversified funds or he wants to invest in the themes. But if again I'm repeating, if Pramod wants to top up themes, he wants to invest more in that, then after 3-4 years, I think there will be a time when he'll have to switch from these themes to some other themes depending on the market situation.
All right. I think we've answered all the aspects of his portfolio. Pankaj, let's move on to Mr. Richard Dsouza's question. He's on the phone line with us live. Good evening, Mr. Dsouza. How are you doing today, sir? You're calling from Mumbai?
Yes, I am. Thank you very much, Kavita. I just have one more query
Sure.
I have recently invested 2 lakhs in Union Business Cycle Fund, and
Right.
just want to know whether it is a good investment for the future, for a long term.
All right. Sure. So you have 2 lakhs invested in Union Business Cycle Fund. Any specific reason why you selected this fund? Did anyone recommend this to you? Do you already have a mutual fund portfolio? Are you able to hear me, Mr. Dsouza? I don't think we have him on the phone line, but then let's get him connected once again. We'll get more clarity on this. So, as per the details so far that we have, 2 lakhs in Union Business Cycle Fund, and he wants to invest 25 lakhs in next 15 months. And will this be a safe investment for SWP for his retirement? Once I have him on the phone line, we'll inquire more about it. So, Pankaj, what do you recommend? And also, as a fund, let's just talk about the Union Business Cycle Fund. 2 questions to you. What is the category, business cycle category? And second, is Union Business Cycle Fund a best performer in it?
Kavita, first thing, see, business cycle as a category is a thematic fund. So, though it has flexibility to invest in different sectors and across the market caps, but because it's a business cycle fund, thematic fund, there are different phases in economy, like there is a expansion, contraction, slump, peak. So based on different phases of economy, sectors are selected in the business cycle fund. So it means there is a narrow mandate. So first thing, any investor who wants to invest in equity, means a diversified fund, it is a better choice that one should consider flexi cap fund, multi cap funds, or large and mid cap funds. So from that perspective, I'll say that before business cycle, you should consider a diversified fund. Second thing, any theme, whether it's a business cycle or any other theme, that should be in a limited quantity in your portfolio. So that is another thing. Now one more question, what you asked, that whether Union Business Cycle. So it's a very new fund. It was launched in March 2024 only, does not have a long performance history. And performance wise also is an average fund in this category. So first thing to him, I'll suggest that when his objective is SWP, he should not consider investing in a pure equity fund, and specifically not in a business cycle fund. Second thing, because it's a new fund, so from that perspective also I'll say that he should avoid adding more money in this. He has already invested 2 lakh rupees, that is fine, but should not think of topping up it. And for SWP, my suggestion that he should consider a dynamic asset allocation fund or an aggressive hybrid fund, or maximum like a fund called asset allocator. So that kind of funds can be considered, not pure equity and not especially this business cycle fund for SWP.
All right, let's talk about parking his 25 lakhs in 15 months. Now, what's the kind of fund mix you recommend? And again, 15 months time. So that is the time in which he wants to invest 25 lakhs. But I'm not sure for how long. And do we have Richard on the phone line again? Richard, can you hear me? Okay, I don't think so. We have him. So I have no clarity on the time frame, for this 25 lakhs that we are talking about now. So what will you recommend?
Kavita, suppose he invests for 15 months and then he stays invested for 5 years or more than that, and then he wants SWP, then my suggestion will be that he should consider flexi cap fund and large and mid cap fund. For example, like Nippon India flexi cap fund, Quant flexi cap fund, or ICICI Prudential large and mid cap fund. That can be one choice, but only when he wants to stay invested for next 5-6 years or more than that. Now, second thing, for example, he wants to invest for 15 months and immediately after that, he wants to start SWP. In that case, he should consider dynamic asset allocation fund like ICICI Prudential Balance Advantage Fund or Mahindra Manulife Balance Advantage Fund. Those funds can be considered for this purpose. And even if for 15 months he wants to start, there can be one more choice. He can add one more fund which will have less equity allocation, like Kotak Equity Savings Fund. So immediately after 15 months, he can start withdrawing from that fund. And later after 3-4 years, because these balance advantage fund, which are also known as dynamic asset allocation fund, they have like 60%, 70% allocation in equity. So he can invest in those funds as well. From there, he can start SWP after 2-3 years. And before that, after 15 months, when he wants to start immediately, that time he should consider withdrawing money from that equity savings fund.
I think you have laid out a wonderful plan for him, but I don't have him on the phone line. So I hope he gets it cleared. And once again, Richard, if you want to send across your question, do that. And this time, let's also talk to you and know more about your investment planning. Let's move on. And I have Mr. Krishna Rao again from Mumbai on the phone line with me. Mr. Rao, good evening. Thank you so much for sending us your question, sir. How are you doing today?
Yeah. Good evening, ma'am. Good evening.
Thank you so much, sir, for sending us your question. And you want to start an SWP of 25,000 per month and 7% increase in each year in terms of your investment that you have laid out. And you have an investment of around 84 lakhs in mutual funds. Okay, so you have 10 funds. I will not read out the name, but I just want to make sure that this is it. You have not added anything. Is that right?
Yeah. There are 10 funds, out of which 2 of them are...
Sure.
I have stopped the investment just 3-4 months back. Other 8
okay, which is ICICI Pru. So that's ICICI Pru Nifty 50 Index and Nippon India BSE.
Yeah.
Right?
Yeah.
Okay. So the SWP that you want, sir, is of 25,000. That's going to be an ongoing SWP and not fixed to a particular period of time.
Yeah. See, I will start with 25,000 and then I would like to increase it by 7% each year.
Sure.
And I would like to know how long these 8 funds would last if I continue with that sort of SWP.
Okay. So how heavily are you dependent on this portfolio? Could I just know that? Is that is this the only investment you have for your regular income?
No, actually, I would like to get. I am covered for other expenses by some other means, like I've got rental income and all those things. But all right. I want to augment that rental income by this SWP.
Sure. All right, sir. let's move on to the to do your planning on this particular portfolio. So, Pankaj, we can look at this in two ways. One part of his portfolio should be the growth that he is still getting out of his investment, and one part of the portfolio that I wanted to answer is where he can take out an SWP. 84 lakhs accumulated so far, and if we talk about 25,000 per month, it doesn't seem like lasting for a very long time. So, what part of the portfolio, according to you, should be still invested, and what part of the portfolio, according to you, can be used as SWP? Because then he might have to park his money somewhere else in order to do an SWP. So, what's the strategy over here?
Kavita, the question is what I understand he asked that if he wants to start SWP right from now, means 84 lakh rupees he has, and he starts withdrawing money through SWP, 25,000 rupees per month, and which should increase by 7%. It means if he wants to withdraw 25,000 rupees per month this year, so next year it should be higher than that. And if we expect 10% returns from his portfolio, even then the money can last throughout his life. So that doesn't seem difficult, because if we invest in hybrid funds, even we can expect 10% growth in his portfolio. So that is quite possible. But if you see the fund mix, he has only 3 hybrid funds. Other funds are diversified equity funds. And if he wants to withdraw money immediately, my suggestion would be that he should switch from these pure equity funds, diversified equity funds, to hybrid funds only. So like Tata Retirement Fund, he has ICICI Prudential Equity and Debt Fund, that is an aggressive hybrid fund. Then he has HSBC aggressive hybrid, and he has ICICI Prudential Balanced Advantage Fund. So these 4 are hybrid funds. He can stay invested. Other funds are diversified equity funds. So Mr. Rao, if you want to start SWP right from next month or immediately, in that case, these funds should also be redeemed, and you should switch to these hybrid funds. One more fund you can add, 1 or 2. For example, ICICI Prudential Asset Allocator Fund. That fund has investment in equity, debt, as well as in gold. So that can be considered. Or a Balanced Advantage Fund, one more you want to add, that can be Mahindra Manulife Balanced Advantage Fund. But apart from that, these all equity funds, like you have Value Discovery or Nifty 50 or Sensex Plan, you should exit these funds.
Mr. Rao, is there anything else you want to ask Pankaj?
Yeah, I think I just repeat what Mr. Pankaj said. I should move the funds to asset allocation fund of ICICI Prudential and balance advantage of Mahindra Manulife. Is that correct?
You can add that fund in your portfolio. I mean, you are not advised to exit from the existing funds, or you are not advised to put all the money in these 2 funds, but you can add them if you need.
Understood. Yeah.
Yeah. Pankaj, you want to say something? Yeah.
Yeah. See, I said, like, you have retirement fund, ICICI Prudential Equity and Debt Fund, HSBC Aggressive Hybrid, and ICICI Prudential Balanced Advantage. You stay invested in these 4 funds. In addition to that, I suggested to add 2 more funds. So you will have total 6 funds. Apart from that, every other fund like ICICI Prudential Value Discovery or ICICI Prudential Nifty 50 or Nippon India Sensex, SBI Flexi Cap Fund, these all are diversified equity funds, which are a pure equity funds. So I'm suggesting you to exit from these funds. So only 4 funds in the list which is provided, first 4, and plus 2 new funds I have suggested you. Rest all the funds, you should exit from them.
All the best, Mr. Rao. Let's move on to Kunal's question. And he says that he's 42 years old and started SIP in mutual funds for his son, who is 3 months old. And okay, so he started the SIP when the son was 3 months old, and now he's 15 months old. So congratulations over there. And he's accumulated almost 6 lakhs. I will not read out the funds because Pankaj, there are a lot of funds in his portfolio, as I can see, almost 8 funds. So time horizon is again 20 years, and any balancing required, the corpus is 15 CR once the son is in his 20s.
Kavita, this PGIM India Midcap Opportunities Fund, he should cancel his SIP in this, and the SIP can be diverted to Quant Midcap Fund, which he has in his portfolio. So not adding any other fund, only diverting from the PGIM India Midcap Opportunities to quant mid-cap fund. That is my suggestion. Second thing, because he has a target of 15 crore, so with this amount, this current SIP, with 12% CAGR around, means he can expect 12 to 15%. If he expect in long term, in 20 years, he can expect something like 4 crore to 5 crore. And because his target is 15 crore, so he'll have to increase his SIP amount from time to time.
All right, so that's the advice for Kunal, and with that, it's a wrap on the show. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave our viewers with our WhatsApp number and email ID, where you need to send across your question and send us your detailed query so that we can have it answered live by our experts. Thank you so much for watching. Goodbye.